How's it going, everyone? It is Tuesday, April 30th, 2024, and this is the video for today. Let's go over the pick from the last video, which was Dollar Tree. So I had a Dollar Tree day trade short. You can see the D1 was very good, had a nice breakout. For the day trading side, we had some nice stacked red candles, really heavy volume, and then it really couldn't get off the deck. It was just compressing at the low of the day. So when I got in right around 12:30, when we got a close really below this level, I took the trade over here at 117.09, and I took a small win at 1 o'clock. And I'm gonna explain why I took the small win when I did, because this is a trade where we had a good entry, but in order to escape the reversal on the day trading side, you had to know when to exit and you had to have a good trading plan. So there's two things that chiefly determine how far the stock is going to move. The first is the stock trend itself. If it's earlier in the day, we have more time for the trend to play out. Later in the day, not as much time. So this is about an average time in the day. These sort of compression breaks usually take a couple hours to form, and then we get this next leg lower. So stock wise, things were good for right now. I'm going to get to what was not good in a second. Market wise, my bias was range bound day, and I knew that this stock was compressing at the low of the day while the market was very weak, and I could really take profits as soon as the trend started to stall. Remember, I'm trading this stock because it is ignorant of the market price action. This stock is powering down lower on its own accord, and that it's evident in the price action and the volume that is happening in the stock. So as long as the stock is performing, I can stick with it. Now, if my market bias drastically changes or if my stock bias drastically changes, that's when I have to get out of the trade. So when I took the trade here at 12:30, let's go back to our SPY market bias. My SPY market bias was unchanged. It was still 0. And my stock market bias was a -3. I really liked this setup. When I got out of the trade, right here at 1 o'clock, when I got out of the trade, my stock market bias was still a 0, but my my stock M5 bias was no longer a -3, it was maybe a 0. And the reason it changed was nothing that the market did, but it's actually what the stock hit. If we go back to this M5 or this D1 chart, sorry, you'll see that there is this higher level that was horizontal resistance and then became support. And a really nice way to take a look at what's happening is to take a look at these volume candles here. You can see that we have quite a few heavy volume candles coming in at this range, and you can see a heavy volume candle is going to be colored at the top over here. And these have a poke above the average volume, the average 50-day volume. So when we see these pokes, we know that we are dealing with some high volume candles. There's a lot of buyers and sellers here. So if this level was support, we broke through it. These sellers became buyers. We also had a post earnings candle, this close over here, coming into play. So a lot of potential stopping points. Essentially, this is a stopping point for this stock. Now, in terms of a D1 trend, you would say, look, this might pause here, but it may not actually reverse. It could take a couple of days for it to break through this level, just like we saw over here. The stock had the support level at around 125. Paused here, bounced up, tested it, and then we finally broke through. So that can happen, but it's not going to happen in time for a day trade. So that was the main reason that I exited out for a tiny win on DLTR. I saw it was near D1 support, and I said, this could break it, it may not break it. And at 1 o'clock, I was really uncertain where the stock was going to go. I knew that when a stock tests D1 support, the chance of an intraday reversal is very high. I don't have a huge price cushion. I entered right around here, 109, so I'm pretty much have a tiny winner at this point. I don't have a huge price cushion, and I have no market tailwind. So if this stock decides to reverse, it's not like the market is going to reel it in. If the market was super bearish, we really see more selling pressure happening in the stock, and I might have more time to get out of the trade. But in a flat market, in a stock that's hitting D1 support, I don't have a lot of time cushion. And I ended up making the right decision for the day trade. The stock kind of went above, tested this level one more time, and then rallied up. You can see today it's coming back down a little bit. And again, on a D1 basis, it could still break this level. But for day trading purposes, I'm out. I took the small win. I was wrong about the stock, but I escaped with a nice little profit. So DLTR was a win, but this was a tougher one because you had to know when you were going to exit. You had to have a great trading plan. Okay, so now that we've talked about DLTR, let's take a quick look at on. So here's on. Remember, we took it right over here on the 17th or the 18th. The stock continues to compress above our short strike. So this is the only open position we have, and this stock is going to expire, or this put credit spread is going to expire worthless in 2 weeks or a week and a half. So still pretty good so far. Again, nothing we have to change. We know what would change market-wise, right? This market would really have to tank down and break through the 100 SMA. This stock has not really been rallying with the market, so if we don't get the reaction we want from this week, we want to be a little bit more cautious about what on does. If the market has a bearish reaction, we might have to consider getting out of the trade while we can. On the other hand, if the market has a bullish reaction, we could see a nice break through this compression, and then we have the delta moving in our favor, and we are very far out of the money, and we don't really have to worry about any market pullback as much or on pulling back because we have a distance cushion and a time cushion. The time decay is on our side. Let's take a look at what the market is doing right now. So to put this back up here, our long-term market fundamental bias is a 1. Our long-term market technical bias is a 1. And both of these are going to be subject to change after this week because we have a lot of news coming out. Our market short-term technical bias is also a 1. So you can see I'm kind of mildly bullish on all the time frames. We are moving up here. We had a little double bottom like I mentioned yesterday. We are right around the 50 SMA, and we're just waiting for this pending news. So once we get that news, once we get that news, then we'll have a little bit more sense of the directionality of the market. So contextually, we know that we're just in a pause period. We're not too overextended. We don't have to worry about the bottom falling out. We are above the 8 EMA, which is always good. And we are in the up cycle of the entire trend. So we have this long trend, we pulled back, and now we're joining the trend at a nice entry point. That's where we are in terms of the longer term market cycles. And one nice way I like to think about these shorter term technicals is that the short-term technical will give me a clue as to what part of the longer-term market cycle I'm on. So if my longer-term market cycle is bullish and we're just starting the move, my short-term technical should be also bullish. When we have a pullback phase, it should be bearish, or in this case, it's neutral. Move up again, short-term technical here. Right, we're kind of neutral, but my long-term technical is still pretty bullish. And as the price action wanes, my short-term technical may become more neutral for longer periods of time. It may be even mildly bearish. And the longer my short-term technical is 0 or even 1, then it means that the longer term technical move is losing some steam because the shorter term move is telling me that the longer term trend, something is changing. So we already talked about some of the outlooks of the market this week, the major events that I covered in yesterday's video. If you're a swing trader, I would be pretty passive at this point. Let's see what happens on Wednesday and on Thursday. If you're a day trader, also keep it pretty passive. There are some small opportunities here or there, but there is nothing that I would really push for. The intraday bias is a little bit more on the bearish side right now because we are breaking down through this range, but I view this action as fairly choppy. So we have low volume yesterday, back and forth price action. We got this news bar, and then it was pretty much swallowed back whole. So didn't really have any net movement, right? Like here is the open, and here is the close. We just did not move at all. Today, market had a gap down, compressed for a little bit. We had this double top coming up over here, and then market has maybe flushed out a little bit of bullish specs at this level. Looks like it may not just be triggering sell stops. We got a little bit of volume, so we'll have to see how this shapes out. But if this move holds, then that'll at least give us some trend on the bearish side over here. But given the news, I'm not sure how much institutions want to de-risk. We're not super far extended on the D1. We're kind of compressing a little bit, so I don't expect this move to have follow through, but the next couple of bars of price action will really tell me if it does have follow through. In terms of the market components, most stocks are on the bearish side. Mega cap tech was doing pretty strong this morning, but tech wasn't too strong. Your flight to safety assets are pretty low. Not really any standout sectors. So I was maybe pretty neutral in the market components. They weren't really biasing me one way or the other. First hour, just like yesterday, we had choppy price action. We might get a directional move right now, and at least that would provide us some nice day trading opportunities. So we're going to be cautious here. 1OP had a bullish cross. We'll see if it actually ends up crossing up over here. But my game plan today is not really take any day trades. Like there might be some setting up later in the day in terms of a midday compression break or a parabolic pullback. So one that I am monitoring right now, I think could be GECH. Yeah, this has a pretty decent trend. Another pick I liked is FL. Nice kind of steady grinder. Occasionally has these little pops up. There's a couple of stocks that are kind of grinding down here. But for the most part, there's not, like, these are all pretty nice D1 charts, and they're just not forming quite as well. So we have Cisco over here. Cisco could be a nice midday compression break. We got this move down. We bounced up higher. Now we're selling off. So it might take a couple of tries to break through this low of the day. But the pick that I'm going to give today is not going to be a day trade. It's actually going to be another earnings time spread. So the pick of today is going to be NCLH. We're going to do an earnings time spread at NCLH. We're going to sell this week's at the money calls, the $19 calls, and buy next week's at the money $19 calls for a 10-cent debit. So this is why I like NCLH. First of all, the price is decent. It's at least around, I like to have a price above $20, but at least $20 is pretty decent. This is pretty close enough. Second, the average move is less than the expected move. You can see in this case, it's about half, but we always want this to be less in the case that it is a lot lower. Or in the case that it's flipped, then it's not really the right candidate for a time spread. Third thing here is that the number of times that it exceeded earnings was pretty rare. So the number of times the average move was actually ended up being greater than the expected moves is only 6.67%. So about 93% of the time, this stock falls within its average move range. The final part is our profit potential. So you can think that the times exceeded is kind of like our risk, and our difference is going to be our profit. The higher difference, the higher profit. The higher times exceeded, the higher risk. So I like to have a difference of preferably closer to 0.5, but 0.4 is also pretty good. And the final part that I like is having really high option liquidity. I think ideally you want something that is at least -2, but for me, I like having it, 4, 5, 6. I like having more liquid option stocks. It allows me to just kind of get out of the spread a lot easier. So we're going to do the NCLH earnings time spread. And you can see I already got the fill, but let's just set this up over here. So that is Cisco, and that is not NCLH. So we really can't see what's going on there. One thing you can do with an earnings time spread is you can actually enter it earlier in the day, and there's a good chance that the stock is going to, you may even get a fill later in the day on this time spread. So it's going at 4 cents, 4 cents bid, 11 cents ask. You might be able to get it even a little bit cheaper, maybe 9 cents if you really wanted to. But that's what I would do for NCLH, given that it is a Wednesday. You could probably set a target somewhere around 30%. So I would target maybe a 13-cent profit target on that kind of move. And should be a nice win on that stock. So that is going to be our pick for today. Again, I'm not going to give any day trading picks right now. I have not found anything that I feel great on. And one thing to keep in mind is that we want to take the highest probability trades. On these LPT sort of days, we don't have a ton of high probability trades. There's just not a lot of candidates. And there's also a lot of candidates that come close, but they don't quite get to it. So maybe I'll look at something like Cisco, right? Where Cisco, this is a pretty nice D1 breakdown. It's not the most organized chart, but in terms of a day trade, this is something that I would definitely take. And if Cisco's definitely one of the better ones today, at least the price action is more orderly. But you can see move down over here, pull back kind of high. Now we're moving down again. So Cisco may not quite set up very, very well. All the stocks that I've tagged, they have good D1 charts, but I'm really waiting for the M5 charts to set up. This stock will have to pull back a little bit. CLF is pretty nice grinder, but may also have to pull back a little bit. And you just don't have the confidence to stick in these trades that much. Not quite sure when the trend is going to be over. So that's kind of why I'm not erring on day trading, and we're not erring on swing trading too much, because we have a lot of news pending. So based on those two things, a earnings time spread, non-directional, this is a good candidate. That's a nice opportunity for today. Thanks for watching, everyone. We're going to take a look at how NCLH does tomorrow.